Hey, what's going on? I'm London, and welcome to my channel called London Business as Usual, where I teach new LLCs how to start, how to grow, and how to scale their business by leveraging their business credit. Now, this episode, I'm going to teach you about bank underwriting secrets. But before we get into that, make sure you make sure you subscribe to my YouTube channel if you like the content that I am providing you today. Now, let's talk about bank underwriting secrets. Because when it comes to these banks, it's not that they don't want you to know this information. It's just they expect you to know this information because you are a business owner and you take your business very seriously. That's what they believe. So they like, hey, you should know this information already. So I want to give you this information so you can improve your chances to getting funding, business funding for your new LLC, for your small business as an entrepreneur. Now, when it comes to the bank secrets, when it comes to underwriting secrets, whether you're getting a personal credit card or you're getting an unsecured business credit card, now I want to be very clear what I am talking about. I'm talking about business funding, because if you watch my previous videos, you need to understand that business credit, business funding, bank credit, these are three different concepts. Today, we're going to be talking about more so business funding, where we're going to take our brand new business or an established business, but we're also going to take the business owner credit, which is our personal credit, put the two together and go get the bank's money. In this case, we're talking about unsecured business credit cards. All right. So now when you're filling out that business credit applications, these are the secrets that I want you to know when it comes to improving your chances to get qualified for these business credit cards. Now, one of the things you need to understand that they look at is the business owner credit. 95% of unsecured business credit card of business funding is predicated off your personal credit. So which means they're going to look at your credit score. The first thing they're going to look at, typically they want you to have a 700 credit score or higher. Now, here's another thing. Did you know? Now, it's kind of going to be a conflict to what I just told you, because I just told you they look at your credit score. But did you know most lenders don't even care about your credit score by itself? What do I mean by that? Well, they also look at your credit profile, the data that's actually reported on your credit report. This is more important than your credit score. Why? Because lenders and creditors, any financial institution out there, understand that your credit score can be easily manipulated. So they just don't focus on your credit score, which means someone can have a 700 credit score, 720 credit score with one trade line on there. Let's say you have a $300 trade line on your credit report. And let's say that trade line is with Capital One. You had it for 6 months. You have no derogatory items, meaning no collections, no late payments, no delinquent accounts, etc. All you have is this $300 credit limit, trade line with Capital One. You look up 6 months later down the line, you have a 720. Now, ask yourself, does that mean you can go to the banks, to these financial institutions, and get a $25,000 credit card or a $25,000 line of credit or $50,000 based on that $300 credit limit? Well, the answer is no, you can't, because you haven't proven that you can manage debt. It's not enough data for them to give you that kind of money, that kind of funding. So that's why it's predicated on the data, your credit profile, not just your credit score, right? Because your 720 credit score can be much different than my 720 credit score. You tracking me? Okay. Now, we want to focus on a credit profile, such as your payment history, right? How well can you manage debt, aka your debt to credit ratio, your credit utilization? Are you paying your bills on time, which is part of your payment history? How long have you had credit? Longevity matters. Has it been 2 years, 5 years, 10 years? That's your credit history. Also, they look at your, believe it or not, your hard inquiries. Did you know most lenders will turn you down regardless of what your credit score is, which means you can have an 850 credit score, which is the highest FICO score we can get as a consumer. If we have too many hard inquiries on our credit profile, I would say no more than 5 per per credit bureau, we could get turned down for business funding. Yes. So remove those hard inquiries. You can always dispute those hard inquiries. Now, That's just some of the data points that they look at when it comes to your personal credit profile. Now, here's what they also look at, because remember, the banks care about two things: your willingness and your ability. Your willingness is part of your personal credit profile. Are you willing to pay us back based on your credit profile? Now, your ability is part of your income. Do you have the revenue? So look at your income, right? Do you have the ability to pay us back? Now, based on your revenue, here's what they don't tell you. Here's another credit secret. When you're filling out that business credit application, here's what you can put on there. When they ask you how much do you make or how much income are you producing, did you know you can put your household income? So not only based on your income, if you have a spouse, based on her or his income, you can put that down. Maybe you have a grandparent living with you. I don't know, but it's your household income. Maybe you have a son or daughter that's bringing in income. You can put that down. Household income. That's a secret. Also, when it comes to your income, you can put down something that's called your stated income, which means you can project your income. So in your business, if you're not making any revenue as of right now, or you're making little revenue, but in the future, you think you're going to make $100,000 based on your future contracts, based on your future invoices, based on your future revenue, you can put down that you project you're going to make $100,000. So you just stated your income. That's a real powerful strategy. That's another credit, a bank secret when you're filling out that business credit application. So these are some of the things that you need to know in order to improve your odds on getting business funding. All right, $25,000, $30,000, $50,000. This can improve your odds significantly by understanding not only your personal credit profile, but also your business credit profile. Looking at those data points, understand that your income, you can manipulate your income some, because they give you the ability to do it. They stated that you can put your household income. So it's not only predicated on your income, it's predicated on everybody that's in the household, which is going to increase your odds significantly. If you're not making any income in your business as of right now, you can put basically your future income or what you project your income is going to be. Is that 50,000? Is that 200,000? Is that 100,000? Right? You can put that information down. So these are all underwriting secrets that most small business owners or new LLCs don't know about. But now you know. Now you can go out there and improve your chances to get these unsecured business credit cards. See you on this video.